Welcome back. Well, we're bracing for a flattish start, but the hope is that we start off a new series and maybe the Bulls have some ammunition to fight back today. So let's see how that goes. But the last few sessions, 950 points down is what we've seen in 6 straight sessions. But plenty of stocks to discuss. Ajay Bodke joins us to tell us and help us out with a couple of fundamental thoughts. Hi, Ajay. Good morning. Thanks so much for joining in. Well, let's talk about the FMCG pack. You have Colgate that delivered its set of numbers. Top-line growth wasn't great, but margin expansion came about. How did you read those numbers and your approach to the stock?
Good morning, Nigel, and thank you for having me on the show. I think broadly the numbers were in line with market expectations. I think the sales growth at around 6%, and the PAT growth of around 23% was broadly in line with market expectations. I think what is keen to watch in case of companies, in case of Colgate, is the 3 initiatives that they've announced. I think the restaging of their largest selling toothbrush, Colgate Zigzag, is what they're going to emphasize going forward in the second half, along with the relaunch of 2 key toothpaste products, Colgate Max Fresh as well as Colgate Strong Teeth. If you look at the earnings growth expected over the next couple of years and the valuations, I think there's not much scope for further upside out there. Because although in FY24, I'm expecting 25% earnings growth, as we move forward, in next year, I'm expecting it to come down and moderate to 15%, followed by only 11% in FY26. And then we juxtapose that with what the valuations the company today is trading at roughly 42 times FY24 earnings and around 36 times 1 year forward earnings. So although the ROEs continue to remain extremely high at around 75% for the current financial year, expected to go to 80%, the growth dynamics as well as limited scope for improvement in margins, I think makes me worry about any further entry into Colgate at the current point in time. Although I think the optimists would argue that there is still huge room of growth. And that sounds counterintuitive because, all of us think that the category has traded a lot. But certain surveys done have shown that 80% of urban India does not brush twice. And 55% of rural India, I think they do not use the toothbrush daily. So that's the statistic that makes the optimists believe that there's still a lot of runway for growth in the rural areas as well as on the urban areas. And that's why the drive to make people brush in the night from the companies there.
Okay, that's Colgate. Ajay, hi. Good morning.
Hi.
Let's get your thoughts on a couple of these banking and financial numbers that have been pouring through. I don't know if you've had a chance to look at the banks. I remember PNB's numbers were pretty decent. I mean, asset quality was showing improvement. We don't say that about Punjab National Bank too often, right? Margins, I think, were up a couple of basis points. Canada looks steady. What's your sense on this space? Because here is where we've had this absolutely breathtaking rally as well in stock prices. What's your take on this part of the market?
Yeah. So we have had a look at the PNB numbers. And I think the pre-provisioning numbers are exactly in line with the market expectations. And the earnings beat, which is eye-popping, some 327% growth in earnings on a YOY basis, has primarily been led by the lower provisioning. So that's been driving the earnings growth. Because if you look at the NII growth, I think at 20%, it is again broadly in line with market expectations. Loan growth, I think, has held up quite well for a bank of that size at 15%, or 3% on a quarter-on-quarter basis. And if you dig deep, I think that's mainly been led by improvement in both corporate sector as well as the retail sector. The CASA has held against
your chat now.
So I think the other point is, if you look at both Canara Bank or Punjab, general trend in the banking sector, that the slippages have declined on for all these banks, and the ROEs are coming up. I think so they still are woefully low at 0.6%, and the ROEs are around 9%. So overall, I think there is still scope for a significant improvement both return ratios, ROA and ROE. And I will be very constructive in Punjab National Bank. I still see some upside in case of Punjab National Bank. So I will be positive on Punjab National Bank.
Positive on Punjab National Bank. Got it. Ajay, good morning. Any thoughts on names like Dixon, which also reported? Actually, Dixon and Amber, if you have views.
Yeah, I think on the entire space, electronic device manufacturing, I am constructive, Prashant. And Dixon numbers also sort of, are quite impressive. So I'll be positive on Dixon. I think I prefer Dixon over Amber.
All right. Ajay, thank you very much for joining in. Good to get your thoughts on a couple of these stocks and sectors. You have a great day, and we look forward to connecting again soon.